If this is what the government is going to be investing their money in, as a taxpayer, give me my money back. This is not at all what the government should be investing their money in for Build Canada homes. Devil's in the details. A reduction in the minimum size of 2 and 3 bedroom units. That doesn't sound so good. They want to reduce the size to add more units. We want to squeeze more units into here, but make them smaller. How are you supporting middle-class families when you want to jam them into minuscule 2 and 3 bedroom units? That doesn't make any sense whatsoever, especially on a government-backed project. Hey there, people. Welcome to episode number 30 of the Under the Radar Real Estate Podcast. As always, I'm your host, Josh, and there's a lot to talk about for this month's podcast. So, yeah, I mean, the budget just dropped this week. The stats just dropped this week. Last week, we had a rate cut. Last week, we had an announcement from the provincial government about an HST cut on new homes. And now I've done a video on the rate cut and the new homes. Watch that. It was a video I posted last week. It's fairly insightful. But this week, we're going to focus on the market stats like we always do in this podcast and the federal budget, because it was promised to be a budget that had a lot of focus on housing. But I mean, spoiler alert, I think it actually fell a little flat when it came to housing, and not for all the same reasons as some of the other social media realtors out there, the stuff that they're screaming about. I mean, mine is much more hyper localized. So we'll get to that later in the video. And we're going to start off with the market stats like we always do. So let me pull it up here on the screen. Yeah, so Market Watch for October of 2025. Today is November 6th when I'm recording this. So numbers dropped yesterday, and I mean, to be honest, they're not really that surprising, I will say. I'm not shocked by the numbers in any way. I kind of felt that these would have been the numbers for October. So when we look at the overall average year over year, so let me just zoom in on here so you can kind of see it clearly. So the year over year summary, I mean, sales are down 9.5%. New listings only up 2.7%. So that's a different trend than what we have been seeing for the past few months. For the past few months, we kept seeing like double-digit new listings getting added to the market. So it's nice to see that new listing on a year-over-year basis has dropped off a little bit. There's still 16,000 new listings for only 6,000 sales is not great. But with that, it also then shows that like active listings sitting at almost 30,000 really for the entire GTA is quite high, right? And they're up 17% year over year. So yeah, not surprising with that many listings and so few number of sales that then prices are down. So the average price in the GTA is just over $1 million, 54, down 7% over last year. Again, none of these are shocking. Property days on market, average listing days on market, both up double digits as well. Again, with that much inventory, it just takes longer for homes to sell. So when you list your home, it's going to be on the market for a lot longer. These numbers all just kind of point that way. And then when we look at Toronto specific numbers, prices down across the board, detached, semi-detached townhouses, condos only down 3%. So, I mean, condos kind of took their hit over the last 2 years. So we're just going to kind of see like how much more condo prices can be tested. And the fact that they're down 3% versus all other property types being down, I mean, townhouses is down double digits in the 416. Semi-detached down 7, detached down 9. Yeah, I mean, I guess you could take a silver lining is that, yeah, condo prices are down, but they're not down as much as other home types on a year-over-year basis. So, yeah, not a lot of surprise there. Now, as I scroll down to the under the radar stats that we like to track on this, one thing I would like to bring up that I don't think a lot of people talk about is that, I mean, I think there was a lot of hope going into this fall because rates were coming down that all of a sudden the doors would open up And then we'd see like a big rush back into the market of for buyers to get back into the market. But I mean, we didn't see that. I mean, any rate decisions that I found in my time as a realtor is that it takes quite a bit of time for buyers to kind of readjust to a new norm. So yeah, I think there was some expectation that people would rush back in, but I mean, people are also cautious, right? There's a lot of uncertainty in the market. So a lot of times you talk about buyers markets, sellers markets. I want to almost call this an uncertain market where sellers are uncertain of what they can get in terms of price for their house, and buyers are uncertain of the value of most homes. And there's also uncertainty about like just overall macroeconomics, right? I mean, there's so much uncertainty in the job market. There's uncertainty with rates, with tariffs, politics, right? Uncertainty across the board still. And I think that's still the sentiment, right? So with that much uncertainty, it's not surprising that people aren't just rushing back in. It'll take a little bit of time for that uncertainty to kind of wind down. So my take is that I think it'll just be an overall slow fall. We had another rate decision last week, like I was mentioning at the start. Price rates have come down a little bit, but with the budget, the bond market has gone up a little bit. So I don't know if it's going to affect, so that fixed rate mortgages are probably still going to stay about the same. The variable rate mortgages, that's where you're going to see a little bit of savings. But now let's jump into the under the radar stats, which is the sales to new listings ratio and the months of inventory. I kind of highlighted here. I don't know if you could have seen it, but let me zoom in just so you can kind of see the numbers a little bit easier. So let's look at the numbers for the overall city of Toronto. Sales to new listings ratio sitting at 34% and months of inventory at 4.8. So if you're new to this is the first time you've seen the podcast, sales to new listings ratio is the amount of sales in a given period versus the amount of new listings. So we saw the new listings were still relatively high. What was that number again? The number was 16,000 new listings for Toronto. So not surprising that the sales to new listings ratio trend is 34%, because when we only have 6,000 sales, only 34% of those new listings that hit the market sold, which points to the fact that we are in a seller's market. Usually balanced about 50%. If that number's over 50%, then we're in buyer's market territory. So still firmly in seller's market. Months of inventory, 4.8. What months of inventory is if there were not another listing to hit the market, approximately how long would it take to sell off all of the inventory, that almost 30,000 listings that are sitting on the market? It would take about 5 months to sell all that off. Now let's look at the average price. Let's jump into some of the under the radar neighborhoods. Some neighborhoods that I tend to target on this channel when I talk about under the radar neighborhoods. So the first one is WO3. So WO3 is pocket. Actually, let me bring it up. Instead of trying to, it's a lot easier. All right, so WO3, you can see it here on the screen. Roughly Dufferin on the east side over to about Weston, Scarlett, Jane, kind of on the west side. You can kind of see right here. South to about St. Clair, north to Eglinton. So this little pocket WO3. So those are the neighborhoods that encompass Oakwood Village, Fairbank, Keelesdale, Rockcliffe, Smythe. When I tend to say West St. Clair West, is kind of this pocket right here. So if we go back to the numbers, average price in WO3 is $950,000, which when we compare that to the overall average in the city of Toronto at $1,069,000, you're looking at over $100,000 in savings to look in WO3. And I mean, yeah, a lot of the product that is in WO3 right now is, I mean, you can find freeholds for around that price point. It's not just condo. WO4, which is just north of that, sitting at $866,000. So where's WO4? Oops. Here we go. So WO4 is Weston. You got Fairbank. You got Maple Leaf. You got kind of the area around Yorkdale. Some of Keelesdale as well is in WO4. So that pocket right there, 866,000, so almost a $200,000 savings over the overall average in the city of Toronto, which is massive. And the thing is with W04, that area has a ton of infrastructure coming, right? I mean, there's a huge transit hub being planned. Let me go back to the map over here. So right here at Mount Dennis, at Eglinton and Black Creek, right in here, building a massive transit hub. So Go, Up Express, the new LRT is all going to kind of originate that little pocket right there, which will create a stellar transit for that area where you can get onto different multiple modes of transit, to get where you need to go. Not only that, it's close to the 401, close to the 400. So if you need to get out of the city really quickly, really convenient location. And yeah, a lot of growth that I see happening in W04, especially some pockets like, I live in Briar Hill, which is right over here, and this pocket right here. The thing with Briar Hill is that we sit right next to Forest Hill. So the average price in Briar Hill versus Forest Hill, we're talking $1 million variance in price, and you get to enjoy all of the amenities and so on and so forth in Forest Hill, and you can live in Briar Hill. And not only that, you have already a transit station there. You have Eglinton West subway station, which is right here, and the new LRT, which is going to come right here. So tons of potential in W04. And then last but not least, let's look at CO3, which is the other under the radar pocket. The average price here, $1,304,000. Yeah. $250,000 more than the overall average in the city of Toronto. But the thing with CO3 is that I call it the under the radar luxury pocket. So you do have Oakwood Village that's in here. You have Cedarvale, you have Humewood, you have some Forest Hill South. So Forest Hill South really pulls up the average in CO3 overall. But if you were to compare CO3 to CO4, for example, just to the north, right? CO4 is almost $2 million, right? It's a $640,000 difference, right? That's just split by Eglinton, right? That when I say under the radar luxury, that is an understatement, right? You're saving $600,000 by just going south of Eglinton. So huge under the radar luxury pocket. Okay, and then just to kind of wrap up the market stats like I always like to do, let's now look at the month to month. Month to month just kind of gives us an idea of like kind of rolling average for the year, kind of where we started and where we're at. So October, we're at $1,054,000, dropped about $5,000 from September. But we're up over August and we're up over July, but we're down kind of throughout the spring, but we're up over the beginning of the year. So we begun the year at $1,041,000 and prices are up. So for all the doom and gloom that we heard, the prices are down. Yeah, it's just kind of like that's been the case pretty much all year. And it's not shocking that we're still in a buyer's market, right? There's just not a lot of, there has to be a spark to bring the market back to life. And HSTCon on new sale doesn't do that. Rate cuts take a while to kind of trickle down through the market. People might just be getting their pre-approvals now, and by the time they actually purchase might be 2026. So it might take a while for us to kind of see the market kind of start coming back to life. My thoughts are, I think 2026 will likely be a better year than 2025. It's not a tough thing to say. 2025 will probably go down as one of the worst years that we've seen in the Toronto Real Estate Board. After we said the same thing about last year, but I really feel like if we're not, we're pretty much probably at the bottom. And there is some hope on the horizon when it comes to rates and when it comes to the economy. Slight hope on the horizon. We'll see what happens when it comes to unemployment, these things like that. And there's stuff in the budget that might help us longer term, which is a perfect segue into our next section where let's talk about the budget that just dropped this week. Because when the elections were happening earlier this year, so every single national party, housing was the number one thing on their agenda. And understandably so, it should have been, right? It really should have been number one, A1 thing that they needed to talk about, because that is for most families, it's the number one expense that families incur, right? It's either you're paying rent or you're paying a mortgage, right? So that was at the top of everyone's mind, is housing. So it wasn't surprising that in the budget, that housing would have been one of the major items. So let's dive right into it. It's called the Canada Strong. You can see it here on the screen. Budget for 2025. Now, it talks about here the first page. This is the summary document. I'd say if you're not going to read through the whole budget, I didn't read through the whole budget. I read through the whole housing portion because that's obviously I'm a realtor. That's the most important thing to me. I did read through the whole summary. Don't just rely on social media or the news to inform your decisions. It's my little PSA. If you're going to read through anything, I mean, the budget is long. So I like I said, I didn't read through it, but I read through this full summary. It's 23 pages. It doesn't take a long time to read. It takes like 5 to 10 minutes, depending on how quick you read and how much you want to digest things. But take a read through it. The first page here, it's really obviously the focus of this budget is it's really to respond to tariffs. Not shocking, right? 75% of this budget is really just, when they say global economic shifts, it's really tariffs. So a lot of this budget will be on that, which is not shocking. The only thing I'll say is that because 75% is now focused on tariffs, where is housing amongst this, right? So, all right, so let's find out where housing is in this budget. So if we look at the third page of the budget, when they talk about the major capital investments, infrastructure is number one, productivity and competitiveness, that's kind of responding to tariffs, is number two, defense and security is number three, and then housing gets its own line item in the budget, which is nice to see that housing is there. I mean, because it is important to most people. But when you look at the investment in housing versus the rest of the economy, they put it here because it's really important to people, but I mean, it almost just kind of feels like a bit of a throwaway. It kind of feels like, hey, we're putting housing here. It is a major item in the budget, but it's not where we're spending a lot of money. Which then, okay, so let's see how they are going to spend the money. So let's stick with this summary for now. So, it talks about empowering Canadians, supercharging home building. So the kind of shining piece of this budgetary spending on housing is the Build Canada Homes, which is basically a new federal agency that they say right here is going to partner with private companies to build faster and smarter. So what they kind of say here in this little promo is that they're going to cut timelines by 50%, reduce costs by 20%, and lower emissions by 20%. Now, I made a video on Build Canada Homes, and my big critique right away was that there wasn't a lot of talk about families in Build Canada Homes. And we're going to get to that, back to that in just 1 second. Because when I read through the actual budget, it didn't make me feel any better about the government's focus on building homes for families. So let's just jump right into that and let's see where all of this money is actually going. Okay, so the idea is that, right now I think we're building 280,000 homes, and the CMHC says that we need between 430 to 480,000 units per year over the next decade to satisfy the amount of demand. And basically, the parliamentary budget officer estimates that 290,000 units annually would actually be needed to close the housing gap based on what we're building versus what we'll need. So we'll need an additional almost 300,000 new units to satisfy that almost 480,000. Cool, interesting graphic here to see labor productivity in residential construction. So it kind of shows the building sector, the business sector and their productivity levels have kind of been on this kind of straight-ish line with a little bump here in 2020 that everyone saw. Housing is kind of tracked it. There's some spots. This is obviously the recession in 2008. Residential construction dropped, not surprisingly. But then it kind of tracked kind of the same curve as the business sector. But that was broken away from it completely, as you can see here, right? So massive drop in residential construction. And not surprising because the market has stagnated quite a bit. So a lot of developers aren't getting into the game and not building because there's no business case for it right now. So that's why the government's stepping in to kind of try and help close that gap, to start building homes again, to get that market moving. So that's why Build Canada Homes was created. Yay! That's probably all the good news from Build Canada Homes, because after that, I'm really having a tough time seeing where this program is going to help families. Like, I understand that this program, I don't want to be completely negative. It's going to help some of the development industry. It's going to help create some jobs in that industry. There are certain things that are tied to that, like immigration. They're going to be focusing a lot more on bringing people in with trades, right? So plumbers, electrician, that kind of stuff, right? So, and that's what we need when people are trying to come to Canada. Let's fill the gaps, the labor gaps. And one of the big labor gaps is in trades, right? So it is positive to kind of see, there's going to be a lot more focus on that to build more housing. So that is all really, really good. So here's the 3 key pillars to the approach. Build Canada Homes are going to partner with industry, which means developers, to build all the affordable housing that they need. Build Canada is going to deploy capital, secure demand, and harness innovative housing technologies to build faster, 365 days a year. So a lot of this is building kind of modular housing that you can build any time of the year. And then they're going to adopt a Buy Canadian policy. So they're going to prioritize projects. And this should have always been a policy in Canada. Use Canadian lumber and other Canadian materials, right? So we want to help stimulate the Canadian economy by making sure that a lot of the new housing that we're building is built with Canadian material, using Canadian companies. So this is where things start to go sideways for me. So there was a lot of like word salad in the budget about housing. This is where things start to go off the rails. So looks like the initial 5 years, they're going to be investing $13 billion in cash with Build Canada Homes. They're saying here, deploy capital, and we're going to supercharge housing industry. Cool. So they want to move quickly right away. So they're going to be developing public land sites, which is something they should be doing. We should be developing public land because we have a lot of land that's just kind of underutilized. With some of that land, they're going to be building 4,000 factory-built homes. That doesn't apply to the major urban centers. Specifically Toronto. It's tough there's not enough space to build a whole bunch of single-family factory-built homes in Toronto. That's just the reality. So it's great for other areas in Canada, not so much for Toronto. And they're going to be adding about 45,000 units across Canada Land's company's portfolio, which is good. Okay, so they're going to be launching a $1.5 billion Canada Rental Protection Fund. I don't know what that's going to entail. They're going to be spending $1 billion on transitional supportive housing. That's really key, especially when we talk about things like the issues we have with parks. I did a video on my channel about parks over backyards, and parks are key to cities. Be able to survive in a city is having great parks, and providing homes for those people who are currently living in parks is key, right? We can't just say get out of the park and where those people are going to go. They have to go somewhere. So building homes for those people who are houseless is key. So if we can build that quickly, get those people out of parks, out of tents, and into some real homes I love this part of it, right? So that's where I think we should be investing more money. Love it. Same thing here with partnering with Nunavut Housing, building over 700 affordable housing units in Nunavut and in the north. Yeah, 100%. Okay. Developing Arbor Downsview. This is where, for me, if this is what the government is going to be investing their money in, as a taxpayer, give me my money back. Because this is not at all what the government should be investing their money in for Build Canada Homes. This is the antithesis of what Toronto needs. Okay? So, now, this is in the budget, and it looks great right here, the way they've presented it, right? So, Build Canada Homes is going to be engaging builders in the development of 540 new homes at Arbor Downsview. Amazing. 40% of the units will be affordable. Amazing. With a mix of studios. 1 and 2 and 3 bedroom. Okay. 2 and 3 bedroom. Okay. Yeah, cool. Supporting middle-class families. Okay. So the first I mean, they mentioned families here and there, but okay, they're talking specifically about families, which is what I wanted. However, let's look at what this project is, because you tell me if this sounds like a family-focused project. So this is the actual application for this project. So they mention it in the budget as like, hey, we're investing. Downsview is federal land. We're going to build there. Cool. Sounds great. However, when we look at the application of this, right? So let me just scroll right down to the bottom because this is where the key is, right? So this project, it was originally supposed to have 1,400 units, which is great. 1,400 new homes in Toronto. They want to now increase it to 1,700 units. That's even better, right? So, hey, this is a government-backed project. They were going to build 1,400. Government steps in. Hey, now we're going to build 1,700 units. Even better, we need more homes. We do need more homes in Toronto. Devil's in the details, because then you move on to the next piece, a reduction in the minimum size of 2 3-bedroom units. That doesn't sound so good. So they were going to go from a certain size of 2 and 3 bedrooms, and they want to reduce the size to add more units. So that's where the more units are coming from. So they want to keep pretty much the same building and say, hey, we want to squeeze more units into here, but make them smaller. So if we go back to the budget, when it says supporting middle-class families, how are you supporting middle-class families when you want to jam them into minuscule 2 and 3 bedroom units? To me, that doesn't make any sense whatsoever, especially on a government-backed project. Now listen, I'm not saying developers shouldn't do what they need to do to try and make money. Okay, if they acquire that site anywhere else in the city and they're not taking tax dollars to help develop this project, do what you got to do. Right? Go nuts. But if the government's backing this project, the number one priority should be building family-sized units. It shouldn't be trying to jam a family into a 2 and 3 bedroom unit. Because I have a real... Listen, what I feel is going to happen here is what happens to so many condo buildings here in this city. Right? So, I mean, the minimums in this project, they'll have 10% of the units need to be 3-bedroom, and the builders won't build more than the 10% that they need to. 15% are 2-bedroom, and I think in this project they also asked that additional... I think somewhere just under 50% of the units will be 2 and 3 bedroom, which sounds great on paper. But that's only half. And then if a lot of those 2 bedrooms, if they're trying to reduce the minimum size, I mean, anyone who follows new construction in the city of Toronto has been seeing the reduction of size of the... So, I mean, what I almost envision this project being is a whole bunch of sub 600 square foot 2 bedrooms and sub 800 square foot 3 bedrooms. Those aren't suitable sizes for families at all. And I don't know the exact size of all these units. I don't want to speculate. So let me back up a little bit because maybe they're a little bit larger than that. But regardless, I just don't like the language that they're already reducing the size of units and jamming more people in. And then what happens though is that like these developments, especially with the Build Canada homes, they should be prioritizing families and family-sized units, not trying to push families away. Because what happens in the end is that these buildings get marketed to investors, and then what happens is most of the unit mix ends up being rental, which is fine, but it's not. I mean, if you were a family that decided, hey, I want to buy here, you end up in a building where 70% of the people are transitional, they're tenants, and you have a 3-bedroom and your neighbor on one side is playing Fortnite till 3 a.m. And on the other side, you have a neighbor who's Twitch streaming in their studio apartment. I mean, if you're trying to have a family in a building like that, it just doesn't work. It doesn't. Right? And developers can have all their developer speak and try to justify all this, but it just doesn't make any sense. And they keep saying, well, we can't sell family units. You don't build family units. Right? That's going to be the argument I hear from developers. Oh, well, we sit on 2 and 3 bedrooms. Yeah, you sit on a 3-bedroom, you sit on a 700 square foot 3-bedroom because no family in the world wants to live in a 700 square foot 3-bedroom. That's why you sit on the product. That's why. Right? Or you build a building where you have a lounge as your amenity and you have all these things that like appeal to a young single person, which is great. Then if you're going to develop for that single person, build a whole building full of 1-bedrooms then. Or when you build a 3-bedroom, build them and specifically call the bedrooms like, hey, roommate rooms. But don't pretend don't just throw a throwaway 3-bedroom and say this is a family and then, oh, we can't sell family size units. Well, you don't build for families. So anyway, I don't want to, because this was mentioned in the budget, I'm going after this project. But what I don't want to see is more projects like this that the government is spending our tax dollars on. I don't want to see it. It doesn't work for what we actually need in a city like Toronto. We need more family-focused development, more family-focused houses. Because if we get a whole bunch of this, it's not providing what we need. Right? If developers, if you have an issue selling this, then this is what you should be pushing the government to help you build and sell. Because I know for me, one of the biggest things I sell a lot of resale homes. I don't sell a lot of pre-construction because a lot of my clients are young families. And young families, we live busy lives. So when you have to get to a point where, let's say you're a couple, you're deciding to have a kid, or you have a kid and you're having a second one, you don't have a timeline of 3 to 5 years to wait for something to be built. Like, I don't know when this building is going to be completed. Right? So someone could say like, hey, I want to look at it now and I have a couple and maybe I have a baby or I don't have a baby. But by the time this is built in 6 years, you could have 3 kids and you bought a 2-bedroom unit. It doesn't make any sense. Right? So I think a lot of the issues, what the government really should have focused on here is that they could have been the financial backer. Like, hey, you don't have to get to that 70% target to get financing to build these. Perhaps the government should have stepped in and be like, okay, well, you don't have to pre-sell this. Build it, we'll provide the financing, and then sell it when it's completed. Maybe that's what the program should have been. Because that's the complaint I always hear from developers. Oh, well, we have to hit our 70% goal. Right? Of course, investors don't want to buy a 1,000 square foot 3-bedroom because they know they're not going to have an issue renting it or they may not be able to resell it. But if you build a 1,000 square foot 3-bedroom and you built a building with a whole bunch of family amenities and then showed how great it was for a family to live there, when it's completed, you would have I would bet a lot of money. I would bet that you would have a much easier time selling that building once completed. And maybe that's what the focus of this Build Canada Homes budget piece should have been. Getting those homes built so families could actually move in and buy them. And then perhaps the ancillary parts of the Build Canada Homes is, if it's a pricier thing to build, then you provide the financing help to be able to afford those great family units. Because I think the biggest problem with condo life is that, especially when it comes to families, is there's just not enough in a building for a family. And I love the location of this building. Right close to the new subway station. It's going to be built on a park. These are great. As a young family, you're like, hey, these are the things that we need. And being close to Downsview, listen, I'm a sport parent. Being close to Hoop Dome, being close to Scotiabank Pond, being close to the hangar for soccer. You have all the sports there. If your kid's into racing, you have a go-kart track right there. You have literally everything if you're an athlete. Right? You have Blythe Academy where if you're an athlete, you can actually go there they tailor the curriculum to sports. Everything for an athlete right there. So I love the location of this, but I'm just concerned that they're not going to be building this for families. So anyway, there's a lot of other stuff in the budget, but I mean, this is a real estate based podcast. I'm a realtor. I'm going to focus on the real estate. Let me look. I mean, in terms of like other things, I mean, you can take a read through the budget. There's some good stuff in here. I mean, there's some good stuff for Canada and kind of not being so reliant on the US anymore. All that is good. Just, I think the housing thing they got wrong. So listen, I don't want to harp too much longer. To wrap this up, I mean, I focus on things that are under the radar for a reason, because I think sometimes we can't always necessarily rely on multiple levels of government. The government can't always save us. So I'm going to keep focusing on under the radar, even if some of my videos only get 50 to 100 views, because I still believe that families can live in the city, right? Even if the government isn't giving us what we need or what we want, we can still make it happen for ourselves. And I think that's the key. So I'm going to keep focusing on under the radar neighborhoods. I'm going to keep focusing on family-sized condos on this channel. So if you are looking for stuff like that, I'm going to keep presenting those options for you. So if you're interested in any of those under the radar options, whether it be the neighborhoods or the different housing types, watch some of my other videos, or reach out, email me, put a comment down below. And truthfully, right? Even if you're not looking to buy or rent, I mean, if you just have questions, hit me up, send me an email. I'm always down for a chat when it comes to real estate. So thanks for watching, and peace out.